Hello. Yes, so hello, dear viewers. This is Tickets Copy Webinars, and you are watching Forex Trading with Rakesh. Today is 30th of August 2022. My name is Rakesh, and I'm your host. There was a small technical late involved in this live stream to start because it was actually it should actually start at 16:30 GMT, but I think the manager who manages the live stream, he has put it at 1700 GMT, but then I realized that as soon as I start sending the data, it will start on its own. So here I am. So like I said, my name is Rakesh and I'm your host. I'm a Dukas Copies community member. Okay, do not think that I am an employee of Dukas Copy. So when I say that I am not an employee of Dukas Copy, that means all the views or the opinions or whatever trading ideas that I am going to discuss in this live stream are of my own, and as the name suggests, we will be carrying out technical analysis of the major currencies in the forex market. Now the major currencies against the US dollar. Okay, so these are the forex majors. When the major currencies are paired with the US dollar, they're called majors. So in this live stream, we'll be strictly talking about the technical aspects of the trading, and we will definitely ignore the fundamentals because I don't talk about them. And as a technical analyst, I already know that every piece of information, whether it is political or fundamental or of any other nature, is already priced into the chart. So what we will try is we will try to follow the charts only for our analysis, and we'll only be using the candlestick charts. Now we have bar charts and other Renko charts and so many, but we will only be using the candlestick charts, and we will try to find out the key levels for all the pairs that we are going to discuss, and we'll see how we can use them to trade and how we can use to extract, how can we use them to extract the maximum information first, and then how we can use them to extract the maximum profits out of them and minimizing our risks at the same time. Now if you are new to the technical analysis, I would request you to go to our channel's page and then select the playlist section and search for the profitable candlestick patterns playlist, and there is another playlist by me, that is profitable chart patterns playlist. If you go through these playlists, it will help you in understanding what we are talking about here in this program, and also you will come to know a bit more about my trading ideas or how my trading style is. Okay, now at the end of this session, I'll be taking the questions from the viewers, so I request you to keep your questions to be asked till the end of the session. Last but not least, everything that I say in this live stream is for information or knowledge purpose only. You should do your own research before you put your hard-earned money on the line. So as such, in this video, I will not be asking you to buy or sell. But even if I say buy and sell, that means ideally one should be buying or selling at those spots. It does not mean that I am encouraging you to put your money on the line. Okay, so that is only on your own discretion. So after saying this, I must show you the risk disclaimer. Please go through this risk disclaimer first before you peek into the webinar that we are going to do now, because after that we are going directly on the charts. And the first chart that I'm going to show you, like ever, is the dollar index. Okay, I almost every time I tell you why dollar index first, because first we want to gauge the market from the dollar index, that which side, which direction the dollar is trading, or how the other currencies are performing with respect to dollar, or how dollar is performing with respect to the other currencies. Now yesterday we had said that the price of the dollar index opened higher yesterday, and after the opening it made a bit high again, and then it came back. We had switched to 1 hour to see this, that after closing here at around 108.75 on day before yesterday, it opened up higher at around 109.11 and made an intraday high at around 109.42, but then immediately came back below the resistance zone at 109.12 levels. Now the price is still staying below it, although we are bullish on the dollar, but here it seems that 109.12 is terrifying the buyers here. They are afraid of buying at these higher levels. Now what can happen? Okay, either the price can break this one and give us a good closing higher, or the price can revert back to this previous support of 104.48. so these are still two valid key points. Now if you have 2 points, one is lower and one is higher, what can you do? You can sell higher and buy low. So do you want to sell here when you are very near to 109.12? No, you don't want to sell this market, because the structure of the market is uptrend, and in an uptrend you never open a sell position. So you wait for this situation to change and the odds to come in favor of the buyers. When they are there, now how can the odds come in favor of buyers? Now if it hits 104.48 area and there it finds some supporting candle, something like bullish pin bar or maybe bullish engulfing, then you can open the buy position with a small stop loss below. That is one condition. Now if you really want to go short this market, you don't short it here. This will be like trading aggressively. Believe me my friends, I have more experience than any other I think was listening to me. More than 15 years of experience I'm saying. If you sell here you may regret, but if you sell below this 104.48 you will not regret. I can explain that in 1 minute. If you sell now and the price breaks above, which is of course the trend direction, then you will regret, oh why did I open it here? No, I should have entered buy market because this is a buy market. Why should I open a sell here? And you will regret, because you know that you should not go against the trend. Now if you want to enter in the direction of trend, then it is cheap near 104.48. but if 104.48 doesn't hold and it breaks below, that means the price has made a lower low. In that case it is a downtrending market, so that time you will be looking for a selling opportunity. Okay, something like this. If something like this happens, then you open a sell here, but don't open just like that. Okay, you wait, you watch what happens to the price when it, after closing below this, it comes back to this area. What happens now? If there is a bearish engulfing in this area, okay, I'm talking about a candlestick pattern at the resistance, something like this. This is a bearish pin bar, this is a bearish pin bar, as well as bearish engulfing. Something like this should happen at that area. Okay, if that happens, then it is a go sell, and in that case your stop loss will be just somewhere here and your take profit targets will be 101.30. so your risk will be small, your reward will be more, and that makes a lot of sense. Conservative trading makes a lot of sense rather than aggressive trading. Okay, so this is one thing. If you like my content, please consider clicking that like button which is just below the video. It doesn't cost you anything, but it helps me a lot. It tells Copy that the one of the members is being loved by everybody who is watching. Okay, the one thing. And after that I want to show you that if this is broken, it will be a double top breakout. We have been discussing this from the starting of the last week, and I think this is a good idea. If this double top breaks out, then that means a reversal in the trend. Okay, so that is another information for us. But as of now, when the price is trading between 109.12 and 104.48, we can still say that these are the two key levels. This is not so important, 109.12 for us, because the price is headed in the upper direction. It can break anytime, but this 104.48 should hold in case the uptrend is intact. If it breaks below and the price closes below this one, then I think this will be a beginning of the downtrend. Okay, and also this will be a confirmed double top breakdown also. So this is one thing. Now let us see what is happening in the euro when it is trading against the US dollar. So this was one of the scenarios that if the price breaks below and test this, so this did not happen, so we should remove the clutter from here. So the price or the uptrend is still intact. Excuse me, guys. So this uptrend is still intact, but actually this is not an uptrend anymore. If you see this high that the candle day before yesterday was made, it was almost of the high of 1.0089. now this high, till the time this is not broken, we cannot say that the uptrend is intact. Now on the lower side we have support of 0.9952 levels, and this will also qualify as double bottom here in case 1.0368 is broken to the upside. Now this we have been discussing. Let us see what is happening on the 4 hour and the 1 hour. Okay, so on 4 hour you see there was a bearish engulfing in this channel. The channel broke lower, but ultimately the next two 4 hourly candles, or you can say in 8 hours, the price came back inside that channel, and now the price is again trying to take support at the inner edges of the channel. Now this is giving us a small hint that the buyers are trying to take control of the market here. Okay, they are trying to push the prices higher. Otherwise you think that if there is a bearish pin bar which is in line with these areas here where the earlier sell-off started, why there will be still a green candle on the 4 hour? That means somebody with a lot of money, not somebody, that may be a group of people. So I'm trying to understand the psychology here. Whenever the price tries to drop here, there's a huge buying to push the price higher. Whenever there is a sell-off, there's a huge buying. Whenever there is a sell-off, there's a huge buying. Whenever there is a sell-off, there's a huge buying. Whenever there is a sell-off, there's a huge buying. So every time somebody is trying to sell this off, there is a lot of buying at this area of 0.9981, or you can say 1.00 area. So you have a lot of support here. But should you open the buy position here? Answer again is no. Why you should not open buy positions here? Because the structure of the market on the daily or on the 4 hourly even is down. Till the time structure is down, we should not be looking for a buying opportunity. Instead, we should be looking for a selling opportunity. One can sell close to 1.0368 in case it does not break. If it holds, then it is a very good selling opportunity. But still the price is a long way from there and it is very close to the support. It doesn't mean that we will be opening a buy position here. We have to sit here on the sidelines with patience. We should not just open a sell position here or somewhere in between. We should open the sell position near the area of interest. This is the key level. That's why I have drawn them on my charts. If you wait for them and you wait for them for weeks and months, and when they come, you execute it, you will get more pips than you would have got while you were trading them in the way, or when you were trading them here and there. So yes, the trades will be less, but they will be much fruitful. So wait like a sniper in the snow. When the price reaches this area, open a short position. After watching, if it happens, if something of bearish kind, like bearish pin bar or bearish engulfing is there, then go short. But otherwise, don't try to open buy positions in this scenario here. Okay, so whereas the key level 0.9952 on the lower side, 1.0368 on the higher side still, and the price is trying to respect this channel that we have drawn. Of course, this is a counter trend channel. Till the time this channel is not broken again, I think we should not be entering a sell position either. Or if it breaks near to this area here around 1.0160 area, I think that will be even a better opportunity to go short than the opportunity now. And even if you get any opportunity near 1.0368, that will be much better. Okay, so this is all I have to say about the euro US dollar. Now the next one is the pound. The great British pound does not look so good when it is compared with the US dollar. Yesterday we saw the pair opening lower and trying to find some support at the lows, but still giving us a pin bar. Of course, it is of bullish nature, but it closed in red. And today when the price tried to go and test the 1.1759 area, it was rejected very badly. Now those of my friends who are there with me from the day one, they know that we have been talking about this level of 1.1759, that this is a very strong level, okay, that we have been talking about it. Okay, so what is the high that the price has made? 1.1760. Do you feel that? Do you feel that vibe that I'm talking about here? Okay, exact. I'm not very, fan of my levels, but yes, my levels are the levels which are respected most of the times. I'm not joking here. This is only 1 week into the webinars. You can come again and recheck my levels which I have spoken about in the past. So I'm not boasting here, although I'm sounding like as if I'm boasting, but yeah, my levels are accurate most of the time. So how can now this is a confirmation that this is a strong resistance now. So where will it find the next support? Now I'm looking at 1.1409 area for the Great Britain pound. So this is already exposed, but on the way down, these falling channel support line, this one here, can offer small support to the GBP USD. MGA, you still there? MGA Damien, anybody there? Is anyone with me? Because I have been doing a monologue from a long time. I think it's 18 minutes into the webinar. I'm talking alone. So what do you think? Do you think that 1.1409 is exposed already, or do you think that the price will rise from here towards 1.2293? What do you think? Let me know in the chat. Okay, talking about the Australian dollar, the price within the, it is within the triangle, but if it breaks lower, actually it has already broken lower than 0.6869 area. This was a strong support, but if it breaks anywhere lower than this triangle, then I think 0.6714 will also be exposed in this chart. On the contrary, if the price finds some support here, it may extend those profits or those buyers towards this area of interest, which is of course dynamic in nature as the price is falling here with the time. So yes, right now this one is a very bearish candle pattern on the daily chart. It is a bearish pin bar with the long wick to the upside, and the price breaching below the strong support of 0.6869 area. And if it gives us a close anywhere below this where the price is currently trading, then I think 0.6714 will be exposed, and we will see it this week. This is about the Australian dollar. I want to give it a close look on the 4-hour. All right, there was a rise, then there was small pullback, there was another buying up. Okay, then it just was shattered. So those who bought this in this area, they have stop losses here. The stop losses are already taken. Now when the stop losses of this team here are taken, and they must have their stop losses near 0.6830 area, I think if it closes below 0.6830, we will definitely see 0.6714 in this market. That is just my understanding of the markets. And if I want to be sure about it, yeah, 0.6830 area, I think if it breaches, then 0.6714 will definitely be exposed in this market of Australian dollar. Talk about the New Zealand dollar. Okay. there was a possible break. Actually, it did not break. If you remember, we had talked about it 2 days back, that it has given us a strong bearish engulfing here at the resistance. And after that, when we draw this line, we had made it clear that if the price strikes this area anywhere with this trend line, it will try to attract some sellers and try to push the price back towards 0.6060 area. Although it has not got that far, but it is already exposed, because if now again the price goes towards this line again, they will again find sellers in that area. Let me make this line even more accurate by doing this. So when next time the price goes back to this area, those who could not sell here, they will try to sell here and push the prices back to 0.6060 area. So that is what I am trying to say here. So we have a good falling trend line here, and New Zealand dollar is obeying that line. I think it will go till the time it is not reaching 0.6060. This line will stay intact. After that, we will see how it unfolds. But right now, the important level on the higher side is 0.6231, and on the lower side it is 0.6060. And this falling trend line for the time being will be a dynamic resistance for the price while it is going down. US dollar against the Canadian dollar is rising much. Now there is a lot of reasons. Although I have also seen before opening this webinar, I have seen the dollar index. As far this daily candle is concerned, it is still in green. This is doji, or you can say dollar is not performing at all. Dollar is on a neutral state. But when you say on the dollar Canadian or the loonie, you see there's a lot of rise in here. Why it is so? This is called anticipation. Why? Because I checked that Brent is falling like anything today. You see, if the Brent is falling, it has a correlation with the US dollar against Canadian dollar. It rises, okay, negative correlation, because Brent price is lower means Canadian dollar is lower. If Canadian dollar is lower, then US dollar will rise against it. This is simple, okay. So if it closes a day above 1.3076, which is an area of interest as per my charts, then we can see higher prices, which are 1.3417 in this market, okay. But on the contrary, if it closes again below 1.3076, then 1.2894 will be exposed in this market, okay? So that's all for the US dollar against the Canadian dollar. Here we have a premature breakout to the upside in the USD CHF, and this breakout was actually expected, but not so close. I was expecting the price to range here for some time and then eventually break out, but it has happened, so it has happened. Now what? Now there is a possibility that the price will come back to this area to test it as a fresh support and then walk towards 1.0049. It has a long way to go, and if there is no coming back to this area, then I think we should not enter this market. Why? Because if we enter this market now, we will have a stop loss below this green candle, and that will be 171 pips, and if we target this area, it is 300 pips. So this is not a good 1:3, not even 1:3 risk to reward ratio. So I think we should not we should not actually enter such markets. On the contrary, if we find this here very near to this area, and if we can open a position near here 0.9630 area, and we keep a stop loss below this one of 65 points or so, and target the same area here, then it will be approximately 400 points, and this will be a good 1:7 risk to reward ratio. So sounds good, and that will be a good opportunity, but not now. Right now the price is rising, okay, it is bullish, but you should not open a buy position here because stop loss will be very deep. So where are the key levels now? One, this I will also consider as the key level now, because this is a broken wedge and testing this area is a key, but this is dynamic, it is changing every day. On the contrary, if we see on the top 1.0049, this is a solid structure with a strong resistance, and on the lower side we have a strong structure of 0.9372 area as a strong support, okay. See how strong as a resistance it was, and next time when the price came here, it held as a very good support. So this time again, if the price comes to this area, it will be holding like a good support. That is what I think. Okay, USD JPY, no selling until 130.39 is broken, because this is our upswing pivot, and now the price is very close to the resistance of 139.38. closing this, if it crosses this one, then the next targets we have not even mentioned. Okay, I think I should mention those targets, but okay, here it is. This is the pivot. This is the high that the price has made, and this is the low that the price has made. So the next target is going to be approximately 146.99, or you can say 147 is going to be the next target if 139.38 is broken on the daily closing basis. But if till the time it is not broken, 139.38 is a strong resistance, and on the lower side we have a strong support at 135.49. Till the time both of any of these two levels, 130.39 and 139.38, is not broken, I think we are not in a good position to open any trade in the long or short respectively. So let us switch to the silver. What is silver saying? Silver, we said that there is no buying silver below, not buying silver below 21.11. Now this is below 21.11. Should I open a buy position because the price is already at the support? Nah, you know already how I take the trades. If I have to open a short, I will let it go below and let it come to retest this and then open a short position after watching how the candlesticks play here. That is one thing. If I want to buy, I will not buy here, but I will buy above 21.11 when I will know that the silver is now strong or there are sufficient buyers to push the price silver higher. Now why I don't want to buy, these are the two reasons. And I don't want to short it here already because it is already at the support. So there's no shorting, also there's no buying also. What does that mean? That means that there's a lot of waiting. There's a lot of waiting time in the silver for us to consider a trade. But if you ask me the key levels, then 21.11 is the key level. On the downside we have 18.30, crucial key level. Anywhere if it closes below 18.30, the price can drop all the way to 16.93 in the silver. Gold, no questions asked. We have broken the falling trend line. Now every time the price is trying to test that line, it is getting supported. Yesterday it got a good doji with a long wick. I was expecting the price to go back towards 1753, but strong US dollar again actually has put it on the risk. The gold, now it is again trying to hug that line to find some support. Now if it really fails to find support here on this line, then the next support that the price is going to get is near 1681. And if it does not get support from this line, I think eventually 1681 will also break and the price may head back towards this 1451 level, but that is a very crucial break of 1681 it has to go through before it goes to 1451. So let us see how the things unfold in the future, but right now 1753 is the resistance and 1681 is the immediate support for the market. Talking about the Brent, we have already actually talked about it. It was trading below 97.57, the crucial level that I had marked on my chart. It was the key level. Actually I was expecting a lot of buyers to jump in to support the crude oil here. Now the Brent, if it closes below 97.52, sorry, 97.57 area, then you see how crucial it is, because after this is broken we have only this low here. These lows are 91.49. all right, after that we have this high here. So from the current market scenario, 91.49 is the support. After 97.57 is broken to the downside on the daily closing basis, and 100.17 is the immediate resistance. After that 107.67 is the resistance. I am actually expecting this area to hold as a good support. 97.57 is what I am talking about. Why? But this has been a good resistance in the past. See, it was an area of importance. Now if this is an area of importance, the buyers may jump in here. See how the buying has taken place from here for a long time, and finally the price came back to this area. So those who have opened the buy positions here, they will be supporting the price again, and if they are not able to support the price here, then the price will be able to go back to 91.49. and if they have saved the price till here, till a low of 92.34, and they are not able to save it this time, then I think eventually they will not be able to save 91.49 also, because their stop losses will get triggered and it will only launch an avalanche of breakdown here, and 91.49 will also break in case this low here is taken out. That is what I am trying to say here. But on the contrary, if the price is holding at 97.57, it may seem 100.17 and 107.67 also again in no time. So last thing, euro against the Australian dollar. Euro is looking strong. Now this is a double bottom breakout. You remember yesterday we talked about this bullish divergence. Okay, this is called bullish divergence, bullish normal general divergence. Now double bottom breakout will occur after the break of 1.5252, but this is a divergence, and this divergence will be confirmed only if the candle closes higher than this falling trend line, and this seems to be closing today. If it does, then we may see a small pullback towards this area again and find some support. Now if you get that, that is fine. If you don't get that, that is your luck, but most of the time it comes back, and I think that will be your opportunity to go and open a buy position in the direction of a trend, not in the direction of a trend, but in the direction of 1.5252 with a small stop loss. You see, you'll have small stop loss here. You'll have a very small stop loss of 200 points, and you have a potential of earning almost 780 points in this market. So right now, what are the key levels? The key levels are dynamic in nature. They are falling and with the time, but 1.43198 is the ultimate level on the downside, and 1.5252 is the ultimate level on the upside. So my friends, with this I am done with my story of the major forex pairs, gold, silver, Brent, and the euro AUD. In my viewers, if any of you have any questions regarding any of the technical analysis that we have done today, you can ask me in the chat. I'll be very happy to answer your questions. And if you want me to analyze any particular pair of your choice, you can let me know in the chat that too. I will be discussing that also for 5 minutes or so. So I'm waiting for your inputs if there's any. All right, my friends, I don't see any questions or any suggestions, so I hope you get some idea about the support and the resistance levels that are of interest in the coming hours and days. My request to you is that please keep in mind to never risk more than 1% of your capital on any single trade. When I say this, I mean to say that you should adjust your position size in such a manner that if your stop loss gets triggered, you should not lose more than 1% of your entire capital on one single trade. Okay, and if you have planned your trade, then plan it in such a manner that if you are getting anywhere 3% or less for 1% of risk, you should not open that trade. If you are getting anywhere less than 3% on your trade where you're risking 1% of your capital, you should not open that trade. You should open a trade only if you're getting more than 3 times the risk that you're going to take. Now with this note, I shall end this live stream. Please press the like button if you find this useful for you. Leave your suggestions in the comment section and consider subscribing to the channel for more such webinars. You can also join the Dukas Copy Forex community. There are so many people, so many things, so many forex traders. The links are there in the description. I wish you a happy and a profitable day. Thank you very much for staying with me.